in financial services. It happened in Canfin Homes a couple of times. And the stock never regained the momentum for a very long time. So I'm hoping that M&M Finance will regain momentum soon and corrective actions will be taken. But undoubtedly, unfortunate incidents, and it will take a beating. It is taking, and it will take a beating for some time.
Any thoughts on BSE, Sudeep? 10%. I mean, the winners just keep winning. That's been the story for the last year and a half, right? Take a bit of a pause and then they just keep moving.
Absolutely. No, I think, Prashant, the way I look at it, I think it's a fantastic stock. And, if we are betting on financialization of savings, equity market culture going up, I think there is absolutely no challenge as far as BSE is concerned. It will definitely, show good performance in the market as well. Also, they have been doing a lot of things right, and they've been, creeping market share. Which earlier was NSE's monopoly. They have started gaining market share there. So I think good things are happening in BSE. So obviously they deserve a better valuation. But I think the way it has moved up, the way it's still moving up, I think it defies, to an extent, I would say, logic. So I will be careful. Fundamentally, there is no problem. The only challenge is the valuation at which it is quoting and it is still moving up.
Okay. BSE, definitely a gravity-defying stock, almost 600% up in the last 12 months. That's been the move. Sudeep, what about the shipbuilders? Suddenly there's excitement on the stocks again. Garden Reach, Cochin Shipyard, all of them are up and about. Again, same question. I mean, while there could be big announcements on orders, the way the stocks have run up, would you take any fresh positions now?
Not really, Surbhi. In fact, I think I had discussed this earlier also that, a fantastic story as far as Mazagaon Dock is concerned or Cochin Shipyard is concerned, even Garden Ridge to an extent, the way they are getting orders, the way the order book is building up is amazing. I think it's never ever happened like this in the history of these companies. So obviously, good times are there for these companies. But there is a fundamental difference between order wins and that translating into the profit and loss account. Some of these, we have to remember that a submarine requires 5-7 years to be ready. So it's a process through which these executions will happen. And there are many slips between the cup and the lip. So I'm not saying, there is any challenge, but it will take a long time. But the market probably is going a little ahead of this entire curve. And that's the reason why I'm a bit cautious on all these stocks at this stage. They are good companies, good order book, everything around them is good, except the valuation has run up well ahead of its time. That's our belief.
Sudeep, thank you very much for weighing in on all these stocks. Need to get into a break. As we do that, it's time to shine a spotlight on the backbone of our economy. A celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME Awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code and be a part of the monumental recognition at the SME Champions Award. It's not just a platform, but an opportunity for you to step into the limelight. Welcome back. Vodafone Idea's double-digit up move is a great time to shine the spotlight on the entire Aditya Birla Group stock, where we've seen a lot of transformation, a lot of steps taken by the promoters to revitalize and grow their companies in the next decade. Nimesh is here. Nimesh.
Hi, Rima. So, as rightly pointed out, the group has been in the news and for the right reason, right? And the entire group is buzzing in trade today. But just first on the news part, today, if you look at Vodafone Idea today, that's up 11%, largely because the group has managed to raise 18,000 crores in the FPO. And the good news was that for that FPO of 18,000 crores, they got a demand of over 1 lakh crores. So that was the kind of interest which was there for Vodafone Idea. And actually, that had a bit of a rub-off on the entire group stocks as well. But from a news perspective, over the weekend, there were a couple of other news as well. One, Ultratech made an announcement that they're buying out a small unit from India Cement for 300 crores, and they're going for an expansion in that in an organic way as well. So that was one news. And second was the vertical demerger, which the board approved for the Mundra lifestyle businesses into a separate entity. They've announced the businesses as well, which will be part of that group, and what kind of debt which will be shifted within the both of groups. So that was a key trigger for that stock to do well. So I'll start with Vodafone Idea first. Stock is up 11%. Big overhang is out of the way. A couple of weeks back, there were doubts on whether they'll be able to raise money. Now they've raised, and in a big way. There was a very strong demand from both HNIs as well as large investors. Now the focus will be on what will the money be used for. In fact, there is an expectation of capex as well as 5G expansion. So that will be a big trigger for the stock. And of course, post-elections, whether there will be tariff hikes. So that's something a lot of investors will be watching out for Vodafone Idea. That had a bit of a rub-off on Indus Tower as well. And additionally, there was a CLSA upgrade as well. So these two stocks got covered today. Apart from that, AB Fashion is up 10%. Now, over the weekend, yesterday there was a call on AB Fashion as well on what the road ahead would be for both the companies. They've announced the vertical demerger, how much debt will be transferred to each of the businesses. And the call was very clearly mentioned that both the whole rationale of the demerger was to make sure that both these businesses take their own course of growth and focus on individual businesses. So that's gone down very well as far as AB Fashion is concerned. So that's the second stock which was buzzing in trade. The third name is AB Capital. Even that is up 7% and on good and on large volumes as well. Interestingly, just beginning of the month, there was a big note from Macquarie on AB Capital. They have initiated coverage on the stock with a buy rating, and they had a target price of 230. Now they believe that it's a next big diversified NBFC from that group, and they're going to largely benefit because of the funding access that the group enjoys and the kind of rates at which they can raise money. So that's the reason why you've seen a big traction in AB Capital as well in today's market. So that's the third name. The fourth name is Grasim. Historically, it's been a holding company, so to speak, but they also have a standalone business. In fact, recently they made an announcement that they're going to focus on one of the businesses, the B2B businesses, B2B e-com business, and that they have a big target in terms of revenues as well in that business going forward. If you just look at the holding structure of Grasim, as I said, it's a kind of a holding company. Because other businesses have done well, even Grasim benefits from that. So they own 57% in Ultratech. That brings the biggest SOTP for Grasim. They own close to 52% in AB Capital, 10% in AB Fashion, close to 6% in Vodafone Idea, and close to 4% in Hindalco as well. So that's the reason why even Grasim is buzzing in trade today. It reflects because of other group stocks doing well. Also, their standalone business is expected to do well. Plus, they've announced the launch of the paints business as well within Grasim. So across the group, there has been a big traction today. All the stocks are buzzing. But that's largely because Vodafone Idea, which has been the biggest pain point for the group, that has successfully raised 18,000 crores via FPO.
All right, and Nimesh has been spotting this for us for a month, more than a month now. So Nimesh, thanks very much. And it's been a fantastic kind of turn that we've seen across the group, as you've said. Jigar Mistry is with us, founder of Buoyant Capital. Jigar, good afternoon. Good to have you with us here. I trust you heard sort of Nimesh outline what's happening in the Birla Group. So I want to ask you straight off the bat, what do you like in that group? And we keep Idea and the telecom bits on one side for now. Rima will talk about that, and then we'll ask you. But the other businesses, the cement businesses, the financial services, the apparel company, what's your sense?
Hi Prashant, good as always to be on the show with you. I think the telecom story obviously makes some bit of sense. Besides that, I think cement is one industry which hasn't really taken a lot of price hike recently. I think all price hikes are bunch to see that the election gets done. And then for a lot of these commodities, it's a seasonal uptake, even for telecom, I think. So within the lot, I think sort of you've traditionally had exposure through Ultratech, Grasim. Paints, obviously, the dealer network looks like they'll be able to utilize that fairly well and get things rolling. So Aditya Birla Fashion, we have owned in the past, we no longer own it. But I think the cement and the commodities business makes a lot of sense at this juncture.
Okay, let's talk about Vodafone Idea now. That's up more than 10%. The stock has been an underperformer year-to-date versus peers. So year-to-date, Indus Towers got re-rated, rallied 80%. Bharti Airtel moved up to a near 30% rally. But there was still skepticism surrounding the success of Vodafone Idea's FPO. And that's the reason why the stock didn't participate. Year-to-date, Vodafone Idea is down 10%. Now that the FPO is successful and it's seen a strong overall subscription of 7 times, is there a case for Vodafone Idea's underperformance to reverse? Now, a successful FPO paves the way for the company to raise bank funding of 25,000 crore rupees, which all contribute to the growth capital to improve its competitiveness. It can invest in 4G, start rolling out 5G, and then maybe the subscriber market share loss gets arrested and the company can actually look at starting to add subscribers. Indus Towers, though, has been the big beneficiary. The maximum leverage in terms of Vodafone Idea's survival has been on Indus Towers. Because if as Vodafone Idea said that they're using this for growth, they will invest, and that investment means money and business for Indus Towers. So Indus Towers is up 80% year to date. CLSA upgrades it to a buy, target price now at 450, and they're saying that even now the stock Indus Towers is cheap relative to its global peers, and at the target price of 450 also, which is a good upside from current levels, about 100 rupees up from here, the stock would still be at a 45% discount to its global peers. So valuations, according to them, according to CLSA, are fairly attractive on Indus Towers. But Jigar, what's the best way to play the telecom story? Is it the start of a new dawn? Is it Vodafone Idea where the price is low? Is it Bharti Airtel, new lifetime highs? Or is it Indus Towers? Or maybe even the Tejas Networks?
Yes, Rima. So, I think you have very well highlighted all the current data points. I'll just take a step back and let you know that ever since Jio joined somewhere around 2016, 2017-18 onwards, the kind of disruption that has reigned in, I think has changed our perspectives altogether, right? Now, you talk to most telecom companies, their eventual aim is to reach like ARPUs of, say, about a little over $3 on a monthly basis. Now that, obviously it's not comparable to US, which is $30, $40, UK, which is $10, $15. We are looking at reaching the lower end of where the African market is, right? But because of the onslaught that has transpired over the past 4 or 5 years, we think that even this isn't going to be possible. Now, obviously, a large part of India's sort of data ecosystem revolves around us continuing to have lower rates. But once there are just 3 players or 2 players and 2.5 players, so to speak, you are eventually going to have a trajectory which is upward sloping, and then you can sort of chart out and branch out a lot of things. Vodafone Idea still sort of remains as to sort of the question as to continuing operations may sort of confound a few players. But as the entire ecosystem is concerned, Indus, sort of Bharti, etc., I think it remains a very, very interesting space. Given stocks are not cheap, they have run up reasonably well as well. But given the sort of ecosystem that we are in, we could sort of look to have some amount of pricing gains once the elections get done.
All right. Hi, Jigar. I'm not going to push you for a stock today, but I want to ask you about this approach to the markets. We are patting our backs and we're telling the retail audience out there the way they've shown the faith with SIPs coming in, from around 3,000 crores to around 18, 19,000 crores. So they've been very, very good. The problem is some part of this retail money has gone into a lot of micro cap names. And there's been a big, massive party out there. And that's some reason where, in fact, you could get a little circumspect. What's your view out there? You have some details. I think that, the micro cap, total market capitalization was around 5 lakh crores. It's gone up 6-7 times, I think, in the last few years. Give us that data point, and will you be a little bit cautious because retail money, they've had a ball or a blast, so to call it.
Right, Nigel. So I think that's what exactly it's transpiring, right? At the bottom of COVID, and we're talking of only micro caps. So company number 501 in terms of market cap and lower. 2018, it reached a high of roughly around 10 lakh crores in market cap. That fell to 5 lakh crores by sort of the low of COVID. And since then, with the rally that has transpired, we are crossing 31 lakh crore in just the micro cap market cap as a percent of total market cap. It's up to like 8% odd, which has been a historical high. Now, if you look at the sort of ownership pattern of these micro caps, 49% of the free float is owned directly by sort of retail, and another 20% via mutual funds. So look at the wealth effect that it has generated, right? For the past 3 or 4 years, it looks like you have generated some phenomenal lakhs of crores of wealth as a cohort. And you are redirecting that money into stocks itself, as well as mutual funds. You look at the sort of small cap folios now, from 4 odd million in 2021, that's gone up to almost 18 million plus. Now, small cap folios are higher than large cap or mid cap individually. And I think that is sort of pulling up the valuations across the board. And in certain cases, that's also happening where the free float is a much lower number. So I think things are great. Money could flow through. FIs tried to sell in 2022. That got bought off. Every other opportunity since, every 1,000-point correction has been bought off. But we are now entering sort of that congestion zone, right? Where you don't really know that, yeah, valuation is expensive, but every time I sell, it looks like I've made a mistake, so I sell. So something's got to give somewhere. Valuations are not cheap. As a fund, we have pivoted a lot more towards large cap. We were almost 70% small and mid cap March 2023. So a little over a year ago. That number has been brought down to under 45% now. If the rally continues, we intend to bring it down further to 30, 35 odd levels. And I think, see, long term, it's great story. Railway, defense, it could be really big stories. But oftentimes we get into this zone where, share price just moves way ahead of fundamentals, and you're left holding the ball for 3-4 years. So I would be circumspect getting into a lot of this low float, small micro cap names. Mid cap, higher mid cap, large cap is, I think, par hold for the course.
Okay, speaking of mid cap stocks, check out Sun Pharma Advanced Research, SPARC. This is probably the 8th or 9th consecutive down circuit day for SPARC, Sun Pharma Advanced Research, down 5% once again. And this is the disappointment that's played out now for 9 consecutive trading sessions ever since SPARC declared to the exchanges that one of its key drugs that was supposed to be a big blockbuster drug to treat Parkinson's, that did not meet the endpoint results in the trials that were going on. And then they've suspended that. And now they'll see if this drug can in fact be used for the treatment of leukemia, but that's a much smaller market size. So that disappointment has really slammed the stock down. Today, even Sun Pharma is down quite a bit. Sun Pharma is the biggest Nifty loser, down about 3.5%. Jigar, any interest in pharma? I'm not sure if you can talk about these stocks, but Sun, the fall is quite a bit today. And SPARC obviously is still reeling under that drug disappointment. Just your thoughts overall on either these companies or the overall approach that you're taking to pharma.
Right, Survi. So I think pharma is an interesting space because sort of if you go back 1984, the Hatch-Waxman Act that allowed for Ranbaxy to file for Lipitor, that set the case which allowed Indian companies to file for these small generic opportunities. The whole rally that ensued till 16-17 was then broken because of a lot of things coming through, right? Obviously, the molecular opportunity changed from single to a lot more complex ones. The GDUFA fees was raised. Lot new players came in. The inspections went up, and all that I think bottom around 21, 22. So I think from April 2023, that's when we put out that article as well. It looks like the entire generic market is fairly poised now to take the benefits of what's coming through. Whatever, like the incremental negatives are now behind us, and you could start looking at a lot more opportunities on a stable pricing base. Companies that do a little better in terms of complex generics, in terms of new approvals, So we have had some exposure there, notably sort of Glenmark, Davies, that are the names that we have traditionally sort of looked at. Pure play generics is something we've still not been able to do, but a combination of the India formulations market plus a little bit of generics business, I think has provided a reasonably decent opportunity the way we have sort of positioned ourselves there.
Jigar, since the last time we spoke, why don't you tell us what you've done in the portfolio? Anything new you've bought, anything you've added on where your conviction has become more bigger? Give us a flavor of what the action has been like at Buoyant.
Right, Prashant. So I think financials continues to remain a reasonably interesting business for us, right? Within that space, I think things have churned out a little bit. The HDFC, ICICI continues to be among our preferred ownerships. But I think at the lower end, you're still seeing a lot more interest with the kind of way valuations are shaping up with Axis and SBI. So I think those businesses is something where the weights have gone up for us. I think that is, the most notable change besides the telecom business. I think a couple of months of telecom exposure that has played out fairly well for us. So I think, I think that's about it, Prashant.
What any other interesting names, additions to the portfolio?
Not really. I think more of the same. It's difficult, right? The businesses you own, you don't feel like selling because they always go up, and everything else that you want to buy isn't coming down enough. So it's a catch-22. I think we continue to own what we do and just recalibrated the weights, as I mentioned, getting far more away from small and mid caps, getting a lot more into the larger caps.
And financials is the largest weight, obviously. I mean,
yes.
Yeah, that's
yes.
Okay. So financials and telecom, which you of course spoke about earlier, are some of the areas which you like. Just a quick bit. Do you own anything in defense as a theme?
Not anymore, Prashant. So we have had a lot of exposure in the past, but it is the same situation, right? Because every time you try to look at these businesses with one particular buyer, which is obviously is the government of India for most occasions, but then with sort of one buyer, MOD or government of India, they giving out a lot of orders. We trying to build in what that means in terms of profitability. Eventually, the people who have tried to execute these businesses in the private sector have not really fared reasonably well. And valuations have had a one-way run, especially post, I think, December when BJP won those 3 state elections and it looked like they'll form the third term at the central government level. So I think from that standpoint onwards, the rally that has ensued post that, it's difficult to even hold on to the businesses if you're looking at it from a bottom-up sort of perspective. And the reminiscence of the capital goods rally keeps coming back to you, right? 2003 to 2008, the rally we had, the whole index went up 19 times and everybody started building in all the sort of orders that will eventually play out. And once the market peaked in 2008, the entire sector did not come back to that same level till 2021. So 13 years of virtually zero performance at the whole index level. Obviously, a lot of companies within that index went down to zero. So one needs to be extremely sort of cautious as to how these stories play out. Obviously, India as an economy can do a lot better domestic build-outs, etc. But we would like the businesses to get acclimatized once it gets to a certain level and then deliver some before they move up. The problem with today's market is that if it's on its way up, it hardly enough finds any time to acclimatize. It just keeps moving up. So difficult for sort of investors like us to then just build in the blue sky and hope for the best.
Someone said, right, what is worth doing is worth overdoing. I think that is the case with many areas. But well put, Jigar. Thank you very much for joining us. And it's a pleasure having you with us here on CNBC-TV18.
Likewise,
so
thank
good
you.
conversation. See you back again soon. We'll take a break. The market's up 35 points, which means we've given up some of those gains that we were talking about earlier. And it's more quiet So 22,367 is where the Nifty is at least. We take a break. We're back with more.
Welcome back. The markets have come off a little bit from the high point of the day of around 22,400 odd. It could be a case where the Nifty Financial Services Index is playing out that weekly expiry out there. So those stocks that are part of that index, if you look at SBI Life, you look at Bajaj Finance, they are part of the Nifty Financial Services Index. They have taken a leg down. They've actually moved to the low point of the day as we speak. So there could be some bit of a factor playing out on that account. And the Nifty Bank has almost moved into the red because some overlap in terms of names out there. Well, Mitesh Thakkar is back with us. Mitesh, what's your call at 3 p.m.?
The idea is that avoid the index. We're talking about this, that the index will face a lot of supply. So avoid that. But trade the breadth, which is where the strength is. And I have a BTST on MCX with the stop below 3999. I'm sorry. And a target of 4050. And Metropolis is a BTST with a stop at 1820 or 1819 for target of 1860.
Thank you very much for that. Let's get to Tata Consumer. It's under pressure ahead of its earnings today. Mangalam joins in for more on that. Mangalam.
Well, the stock did well in yesterday's trading session, so some of those gains are being given back today. But be that as it may, it's about 10% away from its record high, trading at around 63 times FY25 earnings as well. What is expected? A good set. Why do I say that? Because it's a 10% revenue growth that the street is working with, which is nearly twice, the speed at which the FMCG index or the FMCG sector is likely to grow on the top line this time around. And we're also expecting an 18% jump on the company's EBITDA, so margins close to around 15.1%. This compares with 14.1%, so a 100 basis points jump is what we're expecting out there. On the bottom line, 315 crores. This compares with about 345 crores. That will optically be lower on account of a couple of factors. One, the same quarter last time had an exceptional gain. And secondly, this time around, there may be acquisition-related one-offs in the bottom line. What are we looking at? 2 months of additional revenue coming in from Capital Foods, which is the Ching's Makers acquisition in the results. That could be around 75 to 80 crores or roughly 2% of their revenues. Organic India, which was the foods business of Fab India, will start reflecting from next quarter, which is the first quarter of FY25. Overall, India business likely to grow between 10 to 12%. In that, beverages around 9 to 10%, and we've seen around 35 to 40% growth come by for the growth business, which is Nourishco. India foods business is likely to grow by 12 to 15%. What will be a bit of a dampener is the international beverage business, which will grow about 5 to 7%, largely led by price growth, and that's because of the higher prices for tea and coffee. The margins in the international business are more important to track, and the management commentary on scaling up of these acquisitions is something that I'll be watching out for.
All right, Mangalam, thanks a lot for that, well, I think we can go across to Nimish now to fill us in with all the information that he's picking up in terms of D-Street chatter. Nimish, tell us what are you picking up?
Well, the good part, Nigel, is that the momentum continues on the upside and it's backed by FI buying as well. Basically, I mean the institutional buying, right? It's not only the FIs, and that was a number yesterday as well. Even today looks like there will be good participation on the buy side from the institution. So that's from a flow perspective. I guess now after few days of concentration in the large cap names, now it's spilled over to the broader markets as well. The mid cap index is of 1%. A lot of individual stocks are buzzing in trade. That was not the case for the last many days. Only select stocks were doing good. Now it looks like it's across the board. There is a bit of momentum in the broader markets today. From a sector perspective, two sectors stands out. One is real estate and the other one is cement. Both are well bid by large institutions. When I mean there is buying interest from large institutions in these two sectors. I guess technically we are towards the upper end of the band now. 22,350, 22,400 seems to be a resistance zone. So maybe you'll see a bit of a pull down from those levels. But the other interesting to highlight is the VIX. The India VIX is a near all-time low levels now. Historically, we've seen around these levels, the market tends to be a little sideways, and then they trade in a very narrow band for a 1 month period. So looks like from here on, it'll be a very individual stock. And maybe the Nifty and the Bank Nifty may be a bit range bound. That's the overall feedback. But from a flow perspective, the momentum is backed by institutional buying as well.
Okay, all right. Nimish, what about individual stocks? What are you picking up?
So in terms of individual names, the first stock is DLF. I spoke about a bit of interest back in the real estate stocks. DLF stands out. It's been buzzing in trade as well on large buying interest from larger FIs. Interestingly, there was a Morgan Stanley note in the morning, and they put out a tactical buy report as well, suggesting that the DLF could do well, at least in the short term. So that's the first name. The second stock is Max Financial. This is interesting. Couple of interesting reports since morning. CLSA today put out a note. They've raised the target price in Max Financial to 1,400, and even Ambit has put out a note. They have initiated coverage on the stock as well. However, the stock is off the day's high, largely because of bid offers from larger FIs. So looks like at lower levels, there are some bid blocks happening in Max Financial in today's market. The third stock is SAIL. Within the metal names, this SAIL stands out largely on back of strong buying interest from larger FIs, so larger HNI. So looks like some HNI interest seems to be back in SAIL of late. And the last one is Zomato. In a good market with the mid-cap indexes of 1%, Zomato is under pressure, largely on sell flow. So expect very high delivery volumes on the sell side in Zomato in today's market.
Okay, got that. Thanks very much, Nimish, for all the action coming in from the dealing rooms today and all the buzz. Let's move on now. Heavy Industries Ministry has received 7 bids for the ACC PLI scheme for 10 gigawatts hours capacity. Parikshit is here with more details. Parikshit, do fill us in.
Well, this was the second phase of the ACC PLI scheme, which was actually launched by the government in 2021. The total outlay for this scheme was 18,100 crores. The first phase had seen approvals for companies like Reliance Industries, Ola Electric and Rajesh Exports, and they were allocated 30 gigawatt-hour capacity in July 2022. So there was some space, some remaining capacity with the government. Now, the government had recently opened bids for the second phase of the ACC PLI scheme, and 7 bids have been received. In fact, the bids were opened earlier today, and this is for a 10 gigawatt-hour capacity scheme. And the government is saying that they've got a very good response. In fact, the bids received are for 70 gigawatt-hour capacity, or 7 times more than the capacity under allocation. Now, the incentives will be to the tune of a maximum budgetary outlay of 3,620 crores, which will be available to the companies which are finally awarded tenders under this scheme. Some major players in the energy space, in the clean energy space, such as Acme Cleantech, Amara Raja, Anvi Power Industries, JSW New Energy. JSW Group had told us that they would be applying for the ACC PLI scheme. You've got Reliance Industries, Lucas TVS and Vari Energies Limited. Now, the reason why this is important, because eventually the government hopes that there will be a local battery manufacturing ecosystem in the country, cell manufacturing ecosystem, and these players will supply to big electric vehicle makers, car makers, two-wheeler manufacturers, three-wheeler manufacturers in the country, and the overall cost of acquisition of electric vehicles will come down.
All right, Parikshit, thank you very much for that. So some really big players expressing a lot of interest in that battery PLI scheme. We'll take a quick commercial break here. We'll come back. Jay Bala of cashthechaos.com with us on the other side. Stay tuned.
Welcome back. As promised, so Jay Bala from cashthekiosk.com joins us on the show. Well, Jay, it's a stock-specific market, so I want to get straight to the stocks. I believe you have a buy call coming in on one of those pharma names, Torrent Pharma, if I'm not mistaken, and you're a little bit cautious on I think, PI Industries. Tell us more.
Yeah, that's right, Nigel. Good to be here. See, Torrent Pharma has been an outperformer even within the pharma space. So I believe the recent high it saw it's an incomplete move. So, although the risk reward at this point of time is not too great, but, we have to be stock specific and we have to keep the cash register ringing. So with that in mind, keep the exposure a little bit low, but keep a stop loss of over 24.90 for a price subject to close to 28.50 for Torrent Pharma. When it comes to PI industry, the recent move and from the recent highs, it's one of a spike down and then it's been consolidating sideways. This seems to be a bearish consolidation for the stock. So as long as the stock stays below 40.40, I think it's got potential to drop somewhere close to 3,100. So that's the bullish and bearish setup on the stocks.
Okay, so that is the stock-specific trades that Jay wants you to kind of take positions in. Jay, we'll get to the market here in just a bit, but let's just address global markets, right? Because last week was pretty poor for US markets. The S&P dropped below the 55-day average. Last night we've seen a bit of a pullback, although everything else has been very quiet. Yields, dollar, all steady. We've not seen pullbacks there. What's the base case, according to you, from a US perspective?
Yeah, I think the US indices are signaling a market turn, and there's not that much clarity when it comes to the European indices or the Asian indices. I guess, there are some more lower lows to come through for the Asian indices if the US indices behave as anticipated. They are below the March lows. Most of the major indices are below the March lows. The FANG index, which has been the driver for the whole market, even that is, signaling a change of trend for the market. So in the next couple of sessions, I anticipate the Dow Jones to be flat and the Nasdaq to clock lower lows. If that's done, I think there's a good probability that Friday's low that we saw because of the Middle East crisis, that'll get taken out. We'll have a pop-up after that, and then we'll have a much sharper drop down for the markets. When it comes to the US 10-year yields, the most probable path is across of 470 that we saw very recently. So 470 bips. Once that's taken out, the targets are about beyond 500 bips. But there is another possibility that the yields could cool off in the event the market sell-off intensifies. That could be a move towards safety. So in that scenario, we could have the markets see yields cool off. So that's the scenario I'm working with broadly.
Jay, you're not you still have that risk off scenario, which is still a probability, maybe another leg down. So you're keeping that on the table. Got it. For us here, some of the telecom stocks are looking very interesting, Jay. Just want to specifically talk to you about a Bharti Airtel. I don't know if you look at Vodafone charts at all, because the stock has been going through a huge sort of, corporate restructuring development for the last many years. But in case you've looked at Vodafone and Bharti, more importantly, what do you make of the price action now?
I've been bullish on Bharti since December. I've had two buy calls here on CNBC itself, once in December and once later in January. And it's been a star outperformer within the sector. And I don't think it's finished its up move at about 1350 now. It might still have higher highs to come through, but the upsides are getting limited. Vodafone, I do look at it, but as long as it can stay above 14, then that can be some positives. But from a slightly longer time frame, I don't think it's doing anything great. More of sideways consolidation needed before it can launch higher, if it were to launch higher in the medium term.
Okay, Bajaj Finance has slipped a bit as we speak. So Bajaj Finance should come up for you on your screen. LTI Mindtree, which reports numbers today, is in the green, but you can see a little bit of a downtake coming through on LTI Mindtree ahead of numbers tomorrow. And JSW Steel too is down close to about 0.5%. Jay, any other stock recommendations that you would have?
I have an extreme short-term, positivity towards HLL or Hindustan Unilever. I anticipate the FMCG index to bounce back somewhere close to 53,000. And I know this is just a short-term bump up for the stock. I'm negative on it from a medium term. So holding with a stop of about 2100, anticipating a bounce somewhere close to 2400. That might be a very short-term trade, not even a trade that lasts beyond 1 or 2 weeks.
Okay, I think we're just 5 minutes away from close as things stand right now. Apart from the trades that you mentioned, would you look at, Jay, broadly, stocks, lots of stocks after many years making new highs. Look at something like a Sterling Solar Wilson. I'm not sure if you looked at the stock recently. Look at something like a VATech Vabag, which made a new high. Any thoughts on any of these names?
Yeah, I had a look at VATech Vabag, and it's looking quite strong. I think it's got further higher highs to come through. The problem is within the mid-cap space and the small-cap space, this high that's coming to, that's possibly pushing it to its all-time high, the index as such, that's actually looking like a exhaustive move rather than that's something that's going to expand. So with that in mind, I wouldn't be too excessively bullish on VATech, but if you see from a last 6 months to 3 months, 3 months to 6 months perspective, it's done phenomenally well. So rather wait for a pullback somewhere close to 900 odds for VATech rather than getting long at current levels. Yeah, but as I said earlier, the mid caps and the small caps from an index perspective, they are looking a bit toppish.
The top the top keeps getting pushed higher though, right? That's the market for you. What about MCX, BSE, etc.? Any trades here?
MCX, I think it's looking reasonably okay. The recent high of about 40.15, it's about that's the clock a few weeks ago. That needs one more higher high to get taken out. But from a slightly couple of months perspective, it's moving up with its momentum slowing much slower. So this is a signal that the next high could be something that's clocking a top. So as long as the stock can stay above 3,700, I think it's a positive. If 3,700 were to get broken after clocking fresh record highs, I think that'll be a signal that this is a reversal for the stock.
By the way, the metal index is slipping now. The metal index is down close to about 0.5%, and that fall has come through only in the last 30 minutes. So in the large cap space, it's JSW Steel, which has taken a bit of a knock. Nalco is down 1.5%. Vedanta is under pressure by more than 1%. Hindustan Copper's loss is close to about 0.5%. There you have it. Many of these metal stocks are slipping. But Jay, they've had a fantastic run. Is there a trade that you would recommend on any of the metal/commodity names?
Yeah, I think there is a euphoria that's building up in the base metals, and I've been slightly positive on Hindustan Copper from a short-term perspective. I think copper is heading towards a significant resistance, and once that starts to turn, I think the euphoria in the metal sector will start to die down. We'll work with reversal levels later on, but I think Hindustan Copper, if you had to close below 340, I think there's a possibility that would be a reversal for the stock too. So cautious here. I'm tracking the base metals in COMEX. Once the reversal were to come through, I think that will signal a top for most of the base metals and ferrous metal stocks.
All right, Jay, we'll leave it on that note. Thank you very much for being with us and giving us your sense on the market today. The market where the large cap space did cool off, you'd have to say that, because we are a good 100 points off the highest point of the day's range, and the end is closer to 22,350 thereabouts. That's just about a 20-point gain that the Nifty is managing. The weak hands included a lot of commodity plays. So you have stocks like Hindalco, Tata Steel, JSW Steel, even BPCL on the oil and gas side. Quite a few of these names on the losing end of the spectrum. Reliance had a quiet day after its results as well, so 1.5% down on Reliance and some additional pressure in the last 25 odd minutes. Sun Pharma was the weakest link on the Nifty with a decline of about 3.5%. But then on the upside, today was a good day for consumer.